Well guys, just a short 47 days ago, I put out a video on Financial Education 2 talking about this investor that bought $3.3 million worth of Tesla stock $1,500 call options, okay? This was essentially a bet that Tesla stock would go to $1,500 plus by a certain date, okay? I want to do a follow-up on this video here today, okay? I want to tell you essentially what they're looking at right now, and I want to tell you, in my opinion, what they should be doing with the money right now. Should they be selling it out? Should they be buying put options? What should they be doing? I will be giving you my full opinion. I thought this would be a fun video to do here today, especially with Tesla stock's rise recently. Like, it's been incredible. I mean, this was one of the craziest moves I've ever seen by any investor in the stock market. Like, an intense move. Even the WSB community would be proud of this one, okay? This was just one of those YOLO moves. 3.3 mil. I mean, on a $1,500 call, that was way out of the money at that particular time. And there were a lot of jokes. I remember in the comment section, people saying it was me. Okay, it was not me, guys. I just want to put that at rest. It was not me. I swear it was not, okay? I know a lot of people thought this might be something I would do. And you know what? It just wasn't me, okay? That's all I'm going to say here. But with Tesla's rise recently in the stock, these call options have made this individual millions of dollars, okay? Let's get into this, guys. I hope you enjoy this. As always, smash a thumbs up. Start getting into this, okay? So here's essentially what it was, okay? Remember, a call option is essentially a bet that the stock's price is going to go up a lot over time, okay? So they bought at a $1,500 strike price. That day when they bought, they paid roughly around $90, okay? So think about it as $1,590 is the break even. Now, whenever you buy call options, put options, you can sell them off to somebody else whenever you want, okay? And remember, these call options expired January 21st, 2022. So they're still a long way from expiring. However, with that being said, if that individual wants to sell out of those, they can get somewhere around $190 each for those as of right now, which essentially means that they just over 2x'd their money, okay? It was a $3.3 million bet, and so that means essentially now they're like 3.5 plus mil in the positive, okay? Incredible, absolutely incredible. This person, if they want to sell out of these, they literally can take a 3.5 to maybe a little more than a $3.5 million profit. Extraordinary. Let's all give a round of applause to this individual. Absolutely incredible, okay? I mean, you know, that's just something, that's just crazy money. Let's just put it that way. I mean, making a $3.5 million profit in a matter of such a short amount of time, but they took a big risk. I mean, these call options were way out of the money, so this was a big risk, let's be honest, but still, 3.5 mil plus in a matter of less than 2 months, like that is just absolutely insane. Why is this? Well, Tesla stock's improved a lot since then. Remember, when this individual opened up that position, Tesla stock is trading at what, $600, $700 a share? Now it's trading roughly around $1,000, you know, give or take, you know, $10, $20, something like that. So the stock price of Tesla, this is basically why these call options have begun to get so much more valuable. The stock price has just gone up several $100s since that individual opened the position. It's been amazing, okay? So we know they're up massively on this position. In my opinion, there are 5 real options this individual has. They have more than this, okay? But these are the 5 most realistic options that they have. I want to share with you what I think they should do. What is the best option? We'll start with the worst options, in my opinion, go to the mid-tier, and then we'll get to the last one, what I actually think they should do now in this position, okay? Because they got a massive profit, okay? These first 2 are the ones I like the least, okay, of these 5 options, okay? One is to sell all the contracts. So basically just sell out of all the contracts, which now they should have roughly $7 million or maybe a little less than $7 million in value of those call option contracts. And so they sell it all off. They take an incredible profit. I mean, an absolutely incredible profit. Nothing wrong with that. They just completely get out of the position. I don't like that one a lot. Remember, this individual, they want exposure to Tesla stock, and they want it, you know, specifically over the next year or two. So if you sell off all your contracts, now you're in a situation where you have no exposure to Tesla stock. stock. And I don't think that's an ideal situation, especially if you're somebody that wants exposure to the stock. And also keep in mind, if this individual sells off those contracts and they take that profit of, let's say it's $3.5 million, depending on what state they live in, let's just assume they're a US buyer, right? Depending on what state they live in, they basically take half that money away, okay? Because the federal government's gonna take a huge share of that. Remember, they're gonna be in the highest tax bracket possible, and it's a short-term trade, okay? Never mind that, if they live in New York, California, one of these very high income tax states, right? They're gonna have to pay another 10%, if not more than 10%, on top of the federal tax rate. So this individual could be basically looking at that 3.5 million profit that say go down to what, 1.7 mil, which 1.7 mil is still a nice profit, but goodness, 1.7 mil is not that much when you compare it to 3.5, right? So this is why I'm not the biggest fan of this whole idea of let's just sell everything off, take our profit, because all you're gonna, you're gonna take a nice profit, sure, but the government's gonna get crazy money out of that money, okay? That's why sometimes it pays to be the government, right? You collect that tax money, that's some easy money right there, right? Number 2 option is sell no contracts. So essentially, let this puppy ride, okay? Let this puppy ride. Say, I'm not selling out of this. I'm gonna ride this all the way till January 21st, 2022 when these option contracts expire. I honestly don't like this move either, okay? Look at the Dow today. The Dow's just flexing on everybody who's trying to say the Dow could never go down in the market, stock market in general couldn't go down, right? It's just flexing on everybody out there saying, hey, I'll do what I want, okay? That's what the stock market says. I don't care what all y'all guys say. I'm gonna do what I want. And along with the stock market being down, guess what else is down? Tesla, my Tesla stock. Now, Tesla's not down as much as the market's down, but it's still down. And so let's just be honest. If the market moves down huge, Tesla stock's probably going to move down pretty big with it. And we're in a scary stock market right now in which, a lot of stocks have gotten very overvalued. The market in general has gotten very overstretched. And so it's not impossible to imagine the market going down for several months or maybe even potentially a year, okay? Remember, we're only a year and a half away from these option contracts expiring. So if we're in a downtrending market that, let's say, goes for 3 months, 6 months, or potentially a year, that puts Tesla stock in a really tough position to be $1,500+ which is where the stock price needs to be. And remember, as of right now, with the, basically the premium on top of where the stock price needs to be, we're talking about $1,700. And if the stock market downtrends massively, whether it's just for a few months or whether it's for a year, that's gonna put Tesla stock in a very tough position. And this is why I don't really agree with just holding all those contracts, okay? It's a scary market when I'm doing videos like this, like I did, 1 day and 15 hours ago, where I basically am making a video about, selling stocks and taking profits. This is usually the guy that's doing videos about 3 stocks I'm buying, blah, blah, blah a month, right? It's a little different when I go from 3 stocks I'm buying to let's take profits and let's talk about, taking profits in this market. We're in a different time place. So to imagine Tesla stock going down, it's not impossible, okay? Here are their okay-ish options in my personal opinion. They got a couple okay-ish options. I'm not a huge fan of these, but at the same time, I can understand them, okay? Number 3 is you sell half those option contracts and then you play with the house money on the other option contracts. By the way, let me know in the comment section which one of these 5 you guys think is the best option. I would really love to hear your guys' opinion as well down there. But this is one of them, okay? Sell half, play with house money. So remember, they're approaching $7 million worth of call options. They got 3.3 in it, right? So sell half of them off. And you'll take a very, very small profit, and then you're just playing with house money essentially for all the other option contracts out there. And sometimes this is a strategy a lot of people like to use in the stock market. Sometimes they'll also do it with a stock that doubles up. So let's say you buy a Tesla stock, for instance, or any other stock out there, and let's say you buy it for $500, it goes to $1,000, and you bought 100 shares. Sometimes people will sell off 50 shares, take the profit on that, they doubled up their money, right? They got back their full initial investment, and then they'll let the other 50 shares ride. It's not a bad strategy. A lot of people use this, well, I don't want to say a lot of people use this strategy, but a decent amount of people use this strategy when they're talking about something they doubled up their money in when it comes to stock market, and there's nothing wrong with it. I gotta say, it's not a bad strategy. Now, keep in mind, sometimes the opportunities are much bigger than a 2x opportunity in the stock market. So sometimes you could be selling yourself a little short, no pun intended, whenever you take a short-term profit like that. But they could do that, okay? Number 4 thing they could do is sell $1 million or $2 million, but let's just say $1 million worth of these call options off. So if they got 7 mil now worth these call options, sell $1 million, so they only have 6 million, and buy puts, okay? And in terms of the put options on this one, they would have to probably, it would probably make the most sense to buy like $1,000 strike prices, okay? Now they gotta pay like a $300 premium for those. And this is why I put this one also in the okayish options tab. If the premium was somewhat more realistic, I would have put this one into a strong, option out there that they could do. But man, this one's tough, guys, because essentially you need Tesla stock to go down to $700 just to break even. Now, keep in mind, in this strategy, having 6 million call options and $1 million, or let's say $2 million and $5 million, right? So $2 million in puts, $5 million in calls. The strategy essentially is you're looking for volatility, and you're also looking to hedge your position a bit. So just in case you're wrong about this and the stock goes down a bunch over the next, let's say, year and a half, you can go ahead and cash out with some money at least on the put option side. But man, I gotta say, this is why I just put this into the okayish options, because look at that, $700 you need the stock to go down to over the next year and a half just to break even on the move, okay? And remember, you're not really trying to break even on this move. It's just not, if you're hedging, like that would be worst case scenario, is only to break even there, and then you lose all 6 mil, let's say 5 mil, 6 mil, worth those call options that you could sell off here today. That would be just disastrous, right? In order to 2x that money, you would need the stock to go to $400 over the next year and a half. Not impossible, everything's possible, but man, that's tough. $400 over the next year and a half just to 2x your money. That's why I put this one into the okayish options tab. Now, out of those 4 options I just shared out there, which one of those do you guys like the best? I would love to hear from you, but I want to share my opinion now on what I think is the best thing they could possibly do with their money right now. This is a well thought out strategy that I was kind of thinking about, and this is kind of my opinion. Double down on those $1,500 calls. It's YOLO, okay? You only live once. Do you think we came to play games? We're doubling down on those $1,500 calls. We don't care what they have to say, okay? We're not just coming for the bank vault. We're not just coming for the money in there, okay? We're coming for Karen's money too. She's the bank teller. We want her $43 in her purse as well, okay? We want the whole thing. I'm just kidding, guys. I'm just kidding, okay? That might have, that belongs in a special community, okay? That's a WSB community right there, okay? WSB, that's what they would say, okay? I'm just kidding, okay? The best option, in my personal opinion, what this investor could do, number 5, sell all the contracts, flip the money into Tesla stock straight up. This is, in my opinion, by far the best move they could make. I mean, they made an insane amount of money, okay? We're talking millions on this one, millions of dollars. Sell out of those contracts. Don't put yourself in a time pressure situation, right? Get out of that. Get out of that. The stress around, oh my gosh, I need this stock to continue to go up higher and higher and higher over the next year and a half. It's a tough scenario, man, and it's no fun to be in that. You did well. You 2x'd your money in a matter of less than 2 months. Sell, take the profits, flip the money into shares so you still have Tesla exposure, and go ahead and take that 7 mil and buy $7 million worth of Tesla stock and ride it out for the next 5-10 years, rather than the hope that the stock continues to go up in the short term, okay? In January 2022, I could see any of these prices being realistic, and anywhere in between these prices. I could see Tesla stock being as low as $500 in January 2022. Very much a possibility, okay? If all of a sudden the bearish thesis comes back around Tesla, overtakes the stock, let's say we have a major stock market weakness again, either a major correction or a full-scale crash, and a lot of investors getting very scared, margin calls coming, and just, investors taking profits or wanting to put profits different places, I could definitely see $500 being a possibility. It is something you have to consider, and somebody that's even very, very bullish on the stock, you have to be realistic, and you have to at least consider these situations. The stock could be $1,000 basically exactly where it's at. Remember, we've had time periods for years and years where Tesla stock will stagnate, even though there's a lot of excitement going for Tesla's business model. It's happened before for a 4 or 5 year period. The stock goes up a little bit, down a little bit, doesn't really go anywhere. So $1,000, that's definitely a possibility in a year and a half from now. $1,500, definitely a possibility, okay? Going up from here, that's another, 50% upward move, definitely a possibility. $2,000, also a possibility. And so in my opinion, in January 2022, as somebody that's very, very bullish on this stock, but is also a realist, this stock price will be somewhere between $500 and $2,000 in my opinion, okay? But here's where the issue lies. At $500, at $1,000, at $1,500, this investor loses 100% of their money. Remember, they need $1,590 just to break even on this move, okay? So anything under $1,500, they lose 100% of that initial 3.3 mil. So not only do they give up this, insane profit they have right now of, let's say, 3.5 mil plus, right? But they also lose their initial $3.3 million, okay? And this is why I think it is just ludicrous, in my personal opinion, to keep those call options open, man. Close them out, buy the shares. Hey, if the shares go up a bunch, guess what? You're still gonna make a ton of money. I mean, if you got $7 million worth of Tesla stock and Tesla stock goes to $2,000, which is a little over a double up from here, right? Now you're at 14 mil. It's just not worth the risk, in my personal opinion, of keeping these call options open now at this point in time, because literally, like this stock could easily stagnate for a time period. It just went on a massive run where it went from under $200 to $1,000 in a matter of a year. It's been on a massive run, so it could easily stagnate. It could easily go down also for the next year or so, based upon, let's say, the market gets super weak. That's definitely a possibility, okay? And these are all things you have to consider. And at the end of the day, it does not make sense at all for this individual, in my opinion, to keep these call options open. Close them out, take your sick profit, and put the money into Tesla stock. Yeah, you're gonna have to pay your taxes on it, and that's unfortunate, but hey, that's one of the things. When you make a lot of money, guess what? You gotta pay a lot of taxes. It's just the way it goes, okay? Unless the Fed can just start printing our tax money. Think about it, if the Fed can just print all this money, maybe they can just print our tax money. Nah, that's probably not gonna work, okay? So anyways, I hope you guys really enjoyed this video very much here today. Let me know what option you guys think is best, and maybe you have something else you think they should do instead of these 5. I would love to hear from you guys in that comment section as always. Hope you learned from this video. Don't forget to smash a thumbs up. Thank you for watching. Have a great day.